All right, so welcome back. This week we're going to talk about where does your money go when you invest into a real estate syndication. So again, I'm Jason Yarusi of Yarusi Holdings here with Figure Multifamily. If you'd like me here, make sure you go down there and hit that follow button so you get updated when we have new, of course, shows, new, of course, opportunities, new, of course, interesting topics to discuss with you, and that's what we're going to do today. We're going to talk about when you invest as a passive investor, where does your money go? Where does it go when you put that money to work here into a great investment throughout multifamily syndication? Okay, so there's typically 4 places that your money gets utilized when investing into a multifamily syndication. And again, if you do not know what a syndication is, go back and listen to prior shows. But on the high level, a syndication is a pooling of resources or pooling of funds so the group collectively can buy a larger asset and then benefit from the economies of scale of that property. So where does your money go in a real estate syndication? Typically, those 4 places start with the down payment. Typically, when we are buying multifamily assets, we are putting a loan on the property. And so the loan is going to give us leverage, right? Anywhere between 60 to 75% is going to be coming from a lender, from a bank, or from another provider here on a debt side. You as the equity investor, as someone who's investing to be able to get cash flow and also get appreciation, your money is being put to work to fill that gap of the down payment that now coincides with the loan for the property. So that's number 1. Number 2 is the capital expenditures or the construction budget. Typically, when we come into these properties, they are underperforming, whether it's on the property side or the management side, typically both. But we are going to do some chosen renovations or required renovations to be able to improve the property, to get it to perform at the level that we expect it to generate and maximize returns. So your money will be part of going to the construction budget on the property. So far we have the down payment and the construction budget. Next would be closing fees. So as we come into a property to buy that property, there's going to be the legal fees, there's going to be the title fees, there's going to be the inspection fees, there's going to be a number of fees that are part of the closing of the property. You may have transfer taxes or other franchise fees that are part of this closing. So as we come into this property here, we will have to, of course, raise money collectively to be able to cover the down payment, the construction costs, and also the closing fees. And last would be fees that potentially may go to the partners. That could be something of an acquisition fee, right? So the acquisition fee is a fee paid to the operator or the sponsor for basically putting together the deal, offering the opportunity, packaging, and continuing to now take the deal and perform on the deal throughout the hold of the deal. So typically from that point, an acquisition fee could be anywhere between 1 to 4%. Usually commonplace is to see it as 2% of the purchase price of the property here. So your money invested will now go to a total sources of uses. And that total source of uses is going to aggregate from the loan that is placed in the property, and then the need for the down payment, the construction costs, the closing costs, and any of the associated fees with the property. So those are the 4 places that typically you will see your invested money going. And when you invest that money, accumulating all of those other pieces of the puzzle here, that is where the operator themselves will be able to now take it and run with the property to look to improve that property to maximize returns and meet expectations of investors. All right, so again, I'm Jason Yarusi of Yarusi Holdings here today talking on Multifamily Live, talking about everything that happens when you put your money to work in a syndication, where that money goes. If you like, make sure you subscribe, make sure you hit that follow button so you get alerted when these come up again and again. And we look forward to following back shortly with our next topic as well. Let's do this.